This video will teach beginners some of the best candlestick patterns to profit in Forex and indices. There are some important factors to touch on before I begin showing you the setups. The first is to let you know that there is a lot of disinformation out there. Trust me on this. I suffered a lot of heartache and financial loss on my trading journey, and a lot of it was to do with the sheer amount of absolute nonsense in books and online. You should look at trading as a business. It's your own hard-earned cash on the line. Up to 90% of retail traders wipe out their entire account. Don't be one of the people feeding the market. Whatever you learn, do your own backtesting. This is key to success. Backtesting not only proves to you that something works, but it also helps during trades because you know what you're doing is the right thing. Another important thing to remember is that different markets, as well as different time frames, have their own personality. This means that something that's highly successful on, say, the Dow Jones 5 minutes time frame would be useless on the Forex pair US dollar Japanese yen on the 4-hour time frame. Again, do your own backtesting. If something doesn't work, discard it. Don't just follow what you read or watched online, or you will lose money. If you look at any chart, any time frame, and pick any two candlesticks next to each other, somewhere, someone will claim that what you're looking at is the ultimate candlestick setup. The patterns I am about to show you have been extensively tested by me. This includes backtesting and also live trading. These are the only patterns I use because they are consistently successful. But once again, don't take my word for it. Do your own backtesting. One final point is to remember that you cannot simply trade off of candlestick patterns. A candlestick pattern is only one part of what should be a confluence of factors that all align before you risk your money. Okay, let's get started on candlestick patterns. This is a bearish pin bar. Pin bars are perhaps the most famous candlestick, and this is because, quite simply, they are very consistent. We can see the real body and the wick of the candle here. If you want to learn more about candlesticks, then check out my other video, Understanding Candlestick Charts for Beginners, which is on my page at Decisive Trading. For a pin bar, the tail should be at least 2/3 the length of the candle. The body should make up 1/3. You will find a bearish pin bar after a bullish move in the market. The reason the candle works is because the large wick shows a strong surge of sellers coming into the market. This suggests that the bears may be gaining control. A bullish pin bar is the same, but will be found after a bearish move. Any nose or wick should be really small. It should also be noted that a pin bar is not a doji candle. Even with a small nose, the tail is still 2 times the length of the real body. After a bearish move, the pin bar will appear, suggesting that the bulls are taking control of the market. This is a type of bearish morning star setup. This is the equivalent bullish setup. A bullish setup first has a strong bearish candle. This is followed by a long-tailed doji candle. The doji candle should be contained within the real body of the previous candle. This is followed by a strong bullish candle. Why does this pattern work? Well, the doji candle shows that the bulls have stepped in and tried to push the market higher. Although they failed on their first attempt, the bears also failed to push the market lower. This is shown because the doji is contained within the real body of the previous candle. It suggests that the bears are losing strength. The strong bullish candle forming after the doji candle completes shows that the bulls have taken control. The bearish setup is the same idea but reversed. Note that the doji is now upside down. Okay, next candlestick pattern. This is a bullish piercing pattern. This pattern begins with a strong bearish candle. The next candle gaps down at the open rather than opening at the close of the previous candle. The bullish candle, or piercing candle, should then close at least 50% into the real body of the previous candle. So, why does this work? The gap down suggests a strong selling pressure. However, the candle then closed bullish, which shows that even though prices gapped down, the bears couldn't maintain control of the market. A bullish piercing pattern is simply reversed. This is a bullish engulfing pattern. The bullish candle is larger than at least the previous 5 candles. It can be said to engulf the previous candles. Why does this setup work? Quite simply, the bullish engulfing candle shows a strong surge of bulls coming into the market, showing a change in market sentiment. The bearish engulfing pattern is simply reversed. This is a bearish 3-method candlestick pattern. The first candle is a strong bearish candle. There are then 3 bullish candles, all of which are contained within the real body of the first bearish candle. There should then be another bearish candle. This candle should be equal to length to the first bearish candle, or very near to equal in length. And why does this pattern work? The three bullish candles show the attempt of the bulls to control the market. Since price is contained within the first bearish candle, you can see that there is little bullish sentiment. The next bearish candle confirms where the strength is held, and confirms the signal. The bullish 3-method candlestick pattern is again simply reversed. And that is my favourite, most consistent candlestick patterns. I hope you enjoyed this video. If you did, please subscribe to Decisive Trading and also like the video. I intend to put together a full series of videos, exactly what I wish had been available to me when I started. They will lead you from complete beginner to trading mastery. I'm James Orr, and thanks for watching.